If clarity passes, the path to new all-time highs is on the table for this year. It could get a lot easier to get exposure to U.S. assets, which of course are the most valuable in the world for anyone around the world after clarity is passed.
This law has enemies.
If you ask me in a year, Giovanni, and the bill has not become law, and you ask me why was that, I would bet statistically it would be because of this issue.
What is the state of things regarding the Clarity Act?
Yeah, so the Clarity Act is a comprehensive crypto market structure bill that provides rules for intermediaries, third parties, issuers, for how to operate legally under a regulatory framework with crypto in the United States. The bill was first passed by the House last year in July 2025, with crucially 78 Democrats voting with the Republicans, so almost half the Democratic caucus joining Republicans. Since then, though, the effort has been in the upper chamber of the U.S. Senate to advance its own version of clarity. Of course, both chambers of the U.S. Congress have to pass it before it can go to the president's desk to sign. There's been a lot of debate in the Senate about the various provisions in the bill. Two key committees in the U.S. Senate have to advance the bill in order for it to go to the floor. That's the Senate Agricultural Committee, which oversees commodities in the U.S. So the CFTC and commodity parts of the Clarity Act are in the Senate Agricultural Committee's jurisdiction. They advanced the bill to the floor in January. The other key committee is the Senate Banking Committee, which oversees the SEC and other banking and financial matters in the U.S. Senate. That markup, as the committee meeting to vote on the bill, to add amendments to the bill, was supposed to occur in January, but when Coinbase signaled that they were opposed to the way that the stablecoin yield provisions were turning out in January, the chairman of that committee, Tim Scott, pulled the markup and delayed it. And that was 4 months ago. And in those 4 months, enormous back and forth negotiations have been happening on the provisions of the bill, most publicly on whether or not third-party intermediaries are allowed to pass yield or rewards to holders of stablecoins on their platforms. That was negotiated a lot by Senator Tom Tillis and Senator Angela Alsobrooks, who are both on the Senate Banking Committee. They met in the White House with banking and crypto representatives and reached a compromise a couple weeks ago that allowed the bill to then reach this markup in the Senate Banking Committee, which happened last week. Now, that markup is essential. It has to pass the committee before it can go to the floor of the Senate and ultimately be voted on. And we thought, many in the crypto policy ecosystem thought the night before that markup that all hope was lost for a bipartisan result in that markup at Senate Banking. But some fireworks happened during the markup itself. Right in the middle of it, one senator, Senator Ruben Gallego, a Democrat from Arizona, came out about 90 minutes into that markup and said he would vote for it. Senator Alsobrooks joined him and also voted for it. So the bill advanced out of the committee on a bipartisan basis, which dramatically, I think, increases the odds that it will ultimately pass the Senate. So we still have a lot of way to go here, and there are many potential pitfalls and potholes that could cause it to get derailed or slow down. But this is, I think, the most positive indicator we've gotten in the last 9 to 10 months that the Senate has been working on this, that the bill may actually pass on a bipartisan basis.
Yeah, and we also see that the time frame is not very big, in the sense that this bill has the best chances to pass before the fall, because then we're going to have the midterm elections, right? And after that, it's going to be much more difficult to pass a bill.
Yeah, so Congress, both the House and Senate, are out of session in the month of August. It's called the August recess. And during midterm election years, historically, very little of substance gets done between the August recess and the end of the year. Through the midterm elections, which will be in November, but also in the lame duck session that will occur after the midterm elections, where there will still be some members of Congress voting, but who have actually lost their seats. That means that between now and the end of July is really the window to get something really productive done in the U.S. Congress. That's about 9 weeks of Congress time that there is still. And I think by our, this is estimates, but each of the steps takes a little while. I think there's about 6 or 7 weeks of work to do. So you've got 6 or 7 weeks to do, get this thing all the way to the president's desk. in only about a window of about 9 weeks. So it is very tight.
You wrote that the Genius Act, which passed last year, together with the Clarity Act, which hopefully will pass this year, are reminiscent of the Securities Act of 1933 and the Exchange Act of 1934, which paved the way for 100 years of US capital market dominance. Can you explain a little bit more of this comparison?
Yeah, these two laws are two of the foundational laws that govern the U.S. capital markets today. The Securities Act governs primary issuance of securities, right? Selling stocks, issuing stocks. If you're a company, say, in creating your own stock. And then the 34 Act covers the secondary trading of those stocks. And together, those form the basis. And there are other important laws, obviously, as well. But these were sort of landmark coming out of the Great Depression that set the stage for, companies being able to go public in the United States, raise capital and form capital, as we say, and then also for those stocks to be bought and sold between individuals on stock exchanges and through brokerages. And that is the system we have today. It's the U.S. capital markets are the deepest and most liquid in the world. They have been for a long time. And Genius and Clarity back to back in 25 and 26, if Clarity happens, it really kind of has a similar level of magnitude in terms of the way they could reshape and preserve American capital markets dominance going forward. Obviously, the Genius Act solidifies the use of dollar-pegged stablecoins and their integration into everything, the banking system, the brokerage system, the capital markets. That's already law and is being implemented now. Clarity really is kind of like a 34 Act for crypto. It will integrate and allow for the integration of blockchains, digital assets, crypto assets into the traditional markets, into the traditional capital markets. It provides the regulatory frameworks necessary for existing banks and brokerage firms to adopt this technology and these assets with a clear and fair, frankly, investor protecting regulatory regime. So in my mind, I think, people ask whether or not we really need clarity. Isn't crypto doing pretty well right now? I think that's true in the U.S. The market regulators are much more supportive of innovation than they were under the prior administration. But, we can only really guarantee that the current SEC and CFTC makeup looks this way until January 21st, 2029, right? If a hostile administration, that's 2.5 years. That's not bad, right? I mean, and frankly, you're getting a lot of what Clarity is offering from the market regulators directly, but 2.5 years is pretty good, but 2.5 decades sounds a lot better. And Clarity, I think, would solidify the role of digital assets and blockchains in capital markets for decades to come. And that's why we want it now.
This law has enemies. For example, the banks, the banking system, they believe that it would cause a massive flight from bank deposits and cause some sort of collapse in the banking system because people would prefer putting their money into stablecoins, which would get them much higher yields. What do you think about this thesis?
I think it's a very cynical argument. First of all, Americans have plenty of places to park cash and earn yield, like money market funds, and they've been doing that for decades. So it's not, I don't think anyone is currently parking cash in a checking account at a bank and expecting interest. So part of the bank's argument is that, right, if the stablecoins are allowed to pay interest to the holders, then everyone would leave their bank. But newsflash, no one's holding cash in their bank to earn interest already. So the premise, I believe, is false. Second, their data that they cite for this supposed deposit flight, it comes from their own report. It's not an unbiased report. The Council on Economic Advisors of the White House put out a good report contesting their assumptions and data. We put out our own report, which I think is the most comprehensive survey of how stablecoins that pay yield will impact both treasury markets and the banking system. We found that for every dollar of domestic interbank deposit migration, $2 of net new cash will flow into the U.S. banking system from abroad. So this is net additive for the banking system on a whole. We also found that for every dollar that is issued by a Genius Act compliant stablecoin, if they paid rewards, it would actually create, partly from those foreign inflows, net 31 cents of new credit creation capability. They like to say that if people don't have their banks parked at the bank, their dollars parked at the bank, then the banks themselves won't have enough money to lend. Banks aren't the biggest lenders in the US anymore. They also like to say that, oh, small and mid-sized banks will be harmed because these products, the stablecoins that pay yield, would be too good, basically. They won't say it that way. They'll be too compelling. And so people will leave smaller banks. The reality is that the biggest threat to small banks in America has and always will be big banks, which have been opening tens of thousands of branches across America to compete directly with the community and small and mid-sized banks. So I think a whole bunch of their argument is nonsensical. And then you have to ask yourself, why? Why are they making this argument if the data doesn't quite support it and it's sort of upside down on its face? I think they never intended to support this bill, and they are denying and delaying and obstructing in Washington. And it's not just on stablecoin rewards. They're doing the same thing on tokenized securities, both at the SEC, SIFMA, the Securities Industry and Financial Markets Association, which is like the big brokerages lobby. They've been writing mean letters about how tokenized securities, shouldn't be allowed, or the SEC's hands should be tied in allowing them. They fought back on Section 505, which is a provision that would have limited the SEC's ability to use exemptive relief to allow for tokenized securities. And they're reportedly, fighting a little bit on the Blockchain Regulatory Certainty Act, which is dev protection. So they're kind of just obstructing on all of it. I think they're mostly worried about losing their regulatory moat.
Yeah, it sounds logical. When it comes to an average crypto user who doesn't live in the US, why would such a person care about whether the Clarity Act passes or not?
Well, I think our markets are going to become much more accessible. If you don't just need to open a brokerage account, at Fidelity or Schwab, which can be very difficult if you don't live in the U.S., or even very expensive in some countries to do, right? They won't go through the effort to do onboarding for a lot of foreigners to not either to one of our brokerage firms or a correspondent brokerage that has access to U.S. capital markets if you don't have a lot of money. Tokenized securities, I think, is a big reason why. This bill creates a strong pathway, reinforces one the SEC is already embarking upon, and it could get a lot easier to get exposure to U.S. assets, which, of course, are the most valuable in the world for anyone around the world after Clarity is passed. That's one good reason. I also think just the clarity that is brought to the big money centers in the world from having the U.S. Regulators and statutes aligned on the access to digital assets, including Bitcoin and Ether and Sol and Hype and whatever else you're interested in. It should be very additive to those assets. Big pools of capital will feel comfortable investing in crypto after Clarity is law.
There is also another concern. So this is a concern that the Democrats are pushing forward in these discussions. They want to have some more discussion on ethics, as far as I understand. So they want to prevent elected officials, as far as I understand, from benefiting from the appreciation of crypto assets, like what we saw with Donald Trump launching his meme coin, which was highly controversial, I would say. Do you see any ground in those concerns?
I think it's reasonable. The concerns are reasonable. I think it is, interesting to single out one asset class. This is probably, in my view, better handled in an actual ethics bill. But nonetheless, there are many who want provisions included in Clarity that would prohibit prohibit elected officials, government officials, maybe their families from, buying, selling, endorsing, issuing, promoting digital assets. I think that's reasonable. I know Senator Kirsten Gillibrand has been a longtime friend and supporter of the crypto industry, and she has been very vocally calling for this. I think this is sort of the last big hurdle. It wasn't addressed in the Senate Banking Committee because it's not really germane to the committee. It would really be more appropriately addressed in the Senate Ethics Committee, but it will be addressed on the floor. And I do think a compromise is required here for the bill to succeed. I think one of the reasons why people are so optimistic now that it cleared sort of that big Senate banking hurdle is that, if it could overcome some of those objections, rewards, Section 301, which is DeFi, issues related to the BRCA, then it looks like it might be able to overcome this too. It does feel like there's a middle path here. I think the White House has signaled that so long as the president and vice president themselves are not specifically target. If it's more broad and applies to everybody, they might not be opposed to something here, which makes sense, by the way. It's not just about the president and whatever he and his family may or may not be doing in crypto. The White House also has to protect the president, the vice president. They are Article 2 constitutional officers of the U.S. government. They comprise the executive branch, right? So for Congress to be imposing things on the president and vice president is a highly constitutional question. Whereas, if it's broadly applicable to all officials, then it's, I think, a lot less controversial. And I think that's why a lot of us are more optimistic now. It seems like there might be a path through here. I will say, if the bill fails, if it fails to pass the Senate, for example, if you ask me in a year, Giovanni, and the bill has not become law, and you ask me why was that, I would bet statistically it would be because of this issue. So this feels like the sort of the final boss of issues on this topic. And if we can clear that, I think you'll see a positive bipartisan vote to pass it out of the Senate.
When it comes to the chance that this will actually happen, that the bill will pass, you upgraded your prediction, giving it a 75% chance that it will pass in 2026. I noticed that you are more optimistic than traders on Polymarket that give a 61% chance.
Yeah, I think I've been going the opposite of the Polymarket odds most of this time since January. Everyone was very bullish. I was very bearish. People got bullish like 2 or 3 weeks ago. I called it a coin flip at 50-50. Obviously 61 is net positive on Poly, but I don't know why exactly the divergence. Maybe, this market isn't perfectly efficient, but I think the odds are pretty high. I think the number of issues are slowly dwindling. There are still plenty of ones that could cause problems like we've talked about, but we do have enough time. It's not a lot of time. I'm hoping they're, working on it right now so that we're not burning through the congressional clock too much. But I think it was very, very heartening to see Ruben Gallego and Angela Alsobrooks, break ranks, cross the aisle. That took a lot of guts for them. That kept bipartisan momentum for this bill alive. They're definitely going to be receiving a lot of flack from parts of the Democratic caucus over their decision to break ranks, and they deserve a lot of credit for doing that. And I think that courage from them is going to, be seen by a lot of their colleagues across the Senate, and it portends well for the ultimate likelihood of the bill.
A lot of people talk about the Clarity Act as one of the main catalysts that could really have a positive effect on prices. Do you see it as a potential catalyst, or you see other catalysts that people should pay attention to?
Yeah, I think it is a very big positive catalyst. I think if it passes and is signed by the president, that is a big positive catalyst. I think if it doesn't pass, it's more likely to die with a whimper than with fireworks, but pass with fireworks. So I sort of think of it as a potential highly volatile upside event, but still a downside event, but a little bit less downside, right? Because it's not like you probably wouldn't see a headline that says Clarity Act fails in the government, right? It's more likely that, well, they realize the vote's not going to pass, so they pull the vote and sort of dies with a whimper. And, people like me are out here telling you that it's failed, but it's not as explosive. I think there are headwinds, obviously, in markets. The inflation situation is getting materially worse. Geopolitical, the breakdown of the multipolar, of the unipolar world is fully in effect. We're really in a multipolar world now, and that causes a lot of unpredictable things. And then, obviously, you still have AI anxiety and, the fiscal situation. But I think we're likely to see, I think if Clarity passes, the path to new all-time highs is on the table for this year. It's not guaranteed. I don't think, as we record this, we're trading around 76K. I don't think it's like if the president signed it 1 minute from now, I don't think we rocket to like 115 or anything. But I think it really puts the market on a new positive footing, at least inside the crypto market. Macro conditions could be uncertain. We declined to make an end-of-year price call at the end of last year for this year, partly because the markets were so uncertain. The rates picture is uncertain. The commodities and energy picture is very uncertain, right? There's a lot of macro uncertainty, but I think inside crypto, passing Clarity into law could be a major upside catalyst.
I think we covered pretty much all the main points. So, Alex, thanks a lot again for coming to our show.
Thank you, Giovanni. Thanks for having me.